Hey, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is my next lecture in the ongoing series that I'm producing for Bitcoin Meets Elliott Wave. And today, the title of the lecture is What's Up Next for Bitcoin? And then today's date of August 31st, 2021. In my first lecture, I laid out an initial count for Bitcoin. And I'm starting there again. This is on a weekly chart. So we continue to have enough data where we could start a count. And what I really like about starting this now is that we can really take it from the very beginning of when the Bitcoin future started to trade. So again, I started with on an intermediate level. So again, the degrees are the intermediate is labeled yellow, the minor is the saddle brown, the minute is gray, and the subminute is purple. So let's just kind of review where I left off at the end of that first lecture. We have the market starting at the top of an intermediate first wave. Then it puts in a nice clean ABC structure down, and that was the A wave, B, and a C, and that was what we would call a zigzag. So within corrective patterns, we have a zigzag, or what would then be called a flat correction. And flat would mean that the A and the B and the C are basically within the same range. They don't really take out each other's highs or lows. And with a zigzag, it does exactly that. So it's usually a 5-wave A, and then a 3-wave B, and then an additional 5-wave C wave. And that's pretty much what we got to form intermediate wave 2. Then we began to form intermediate wave 3. And within intermediate wave 3, there are going to be 5 waves of minor degree. So we have a wave 1, wave 2, wave 3, and I had initially labeled this as wave A of minor wave 4. And I put a B wave here for of minor 4. But then after the Bitcoin basically just kind of hung out here, it had reached a high at 50,585, pulled down about $2,000 or $3,000, maybe up to $4,000, and then just kind of moved sideways, not really doing very much at all. And with the count the way it was, with the B wave marking that as the end of the B wave, it should have just begun to tumble. And as a C wave unfolded, and the initial indication was that that C wave would likely come back down towards this 200-day moving average, which sits at 20,736. That was the original thought. But I've now gone back and I've taken this down to our daily chart so that I can start to look at what actually happened inside that wave. It still can be considered a 5-wave decline off of that high, which is right now the all-time high at 65,520. But I began to look at this as an A, a B, and a C for wave A, and then A, B, C for wave B. And it does fit better because here we have this does work out to be 5 waves down. I can take it down one more level, put it on the 4-hour chart, where we can see the internals of that decline. As you can see, 1, 2, 3, 4, 5. So it came in pretty clean, and as did this being 5. So this was a little bit of an irregular type of a B wave. It was very complex, and the length of it. So I ended up, instead of calling it a 4th wave, I put the B there. And primarily because if this was indeed a 5, and this was A, B, and this was C, then this should start to move, and it's not. It's stalling, and this is 3, and this is ending up being a 3, and this may end up being a little 5, and then we should launch again higher to finish the minor wave 5. So that's why I decided to change it. Now, we continue, or I continue to allow the market to tell me what is going on. So in that case, we need to be flexible, as this is a count or a projection that is fluid. So this market trades every day. So in that case, we have to be more open to all the possibilities of what can happen. And if you remember inside my first lecture that I did and inside that video, I was discussing a preferred view and an alternate view. And that way is something that I like to work with because it shows us more clearly what all the possibilities are. And they would basically carry an upside count and a downside count. Because again, letting the market show us what it wants to do keeps us in a better position to actually trade what's in front of us and to be more prepared. So instead of switching all out of positions because we feel this is the high and now we're going to start going short or we're going to start looking for ways to get short, then it doesn't make sense. We need to continue to trade what's in front of us because obviously the market is letting us know it's not ready to go up or down. So it continues to consolidate right in this level. And that's on the daily chart. So this consolidation now is 1, 2, 3, 4, 5, 6. It's in about the 7th day of consolidation. So it's been doing this for about a week. Now, again, we may still rise up a little bit and then begin to drop more precipitously as the market gets more information, as traders then are able to determine what actually the next move should be. And so I continue to leave open the possibility that this will get flipped back and that this again will be A and this will be a B. Because what could really put the icing on the cake in terms of that count is that for this to remain a 3, I need that little low to come in. So maybe one new low below 46,230. Then I could mark this as a small wave 4 and we get a 5. So the market would need to break above 50,585 to confirm that indeed this is the count that's in force. If it's not, then it goes back to this being the A and then A, B, C for B. And then if anything, we still have maybe one small leg up to come, which will come right above there, but not get very far for a 5th wave inside the C wave. So those are our possibilities. So in essence, what I'm doing here is I'm presenting the preferred view and the alternate view all in one. So what can we do with that? Taking it back down to the 4-hour chart, we can determine and put some parameters around what can we expect from a rally from here. If this is going to be the end of wave 4, or possibly even, we're going to run it to here to give some indications. We begin to put Fibonacci extensions. And what those extensions are doing, it just is relating the moves of 2 waves that are relatable. So let me put this up. There it is. And now I'm just going to park and move this right there to 30. There, we'll leave it right there. If indeed we're looking for a 5th wave, then it's related to the 3rd wave in the following way. The first relationship would be is that wave 5 is equal to 0.618 times the distance of wave 3. That comes in at 59,490. But indeed, if this is going to be a minor 5th wave as it comes up, then we're going to be looking for a lot additional highs. So I'm going to stop right there, move back out to our weekly chart. And now we're going to add an additional same type of Fibonacci that we're looking at. So in other words, here we're looking at the minute 5th wave. And now we're going to look at the minor 5th wave. What are the capabilities of that minor 5th wave? So I'm going to put this up to that high, down to this low, if this is wave 4, right there. Now, let me take this back down to that 4-hour chart. And now we begin to see, did I get there right? Not quite. So let me just and really, I want to be precise on this because it does affect our numbers. And so we're trying to get as accurate as we possibly can. And I'm going to go, where was that number? 60. See, really, that one's got to be right. So it's 65,520. That would be the high value. And we are down at 2,800. So we'll fix that. And the starting point was 4,000, right? 180. Okay, let's change that. Okay. And that's good. Okay, so now we're looking at what the possibilities for the minute wave 5 and then the minor wave 5. Let's see where we might get some overlap. And we begin to get overlap right here at 67,705. Now, if this fifth wave, what the expectations would be for a minor fifth wave is that it takes out that high at 65,055. It creates a new high. The minimum would be 67,005. And that happens to be where the minute wave 5 would be equal in length to minute 3. But let's continue to go higher. Oops, it doesn't want to. So it should though. There you go. Come on. So we actually can build, here's our next sequence that it starts to group together. And that would be where the minute wave 5 would be 1.382 times the length of that minute 3. And that comes in at 75,920. And then the minor wave 5 would be equal to 0.786 times the length of the minor 3. And that comes in at 77,013. And then we continue to have resistance until we get up here, where minor 5 would be equal in length to minor 3, totally acceptable under Elliott rules and guidelines. And that comes in at $90,140. And actually, it still is in the range of possibilities that minute 5 would equal 200% times the length of minute 3. And that works. And I'll tell you why. Under Elliott rules, here is the breakdown. And out of a 5-wave structure, wave 3 is most commonly the longest and the strongest, but it cannot be the shortest out of that 5-wave sequence, out of waves 1, 3, and 5. Here we have wave 1. It's the shortest. So wave 5 can extend and get up here and still leave it as a 5-wave rally up. So now we're sitting at a 4-hour chart. So that's putting in several days. If I move this out to the daily chart, it's going to make it even a little bit clearer that this is going to take some time to get up there. But what we're really looking for is for the market, come on, thank you, for the market to get going. And that in this 5th wave, it should. It should definitely just begin to move itself higher and then actually have possibilities to accelerate and break above initially that 65,520. Now that would be a minimum. That's what I'd be looking for, a minimum, new highs above that level. If indeed this is going to be minor 4 and we're looking for that minor 5th wave. Now remember, as we get up to these highs, what we're completing on a little bit larger level is that, I'll move back out to the weekly, that there is the end, there's intermediate wave 1, intermediate wave 2. We're in the middle stages actually, and now if we're in minor 5, we're in the top 5th of this entire move, which will put together equals intermediate wave 3. So how that works, on an intermediate level, we're counting a 5-wave move. We're so far have completed waves 1 and 2. 3 is still in progress. So once that is complete, we have a 4th wave correction and then an additional 5th wave rally. Then once that's complete, folks, we're then just completing primary wave one. So in essence, now you see that in the last lecture, I talked about how Elliott wave is a series of building blocks. And I made the analogy that building blocks and blockchains. So, and the reason I kind of put that together is because the more I investigate and look at what is really going to propel the cryptocurrency markets, it's the technology, not necessarily that it's Bitcoin. It's the technology behind all of this. It's the technology of these blockchains. It's the improvements. It's the ability to provide the security that's going to be needed as assets are transferred immediately with great speed and accuracy around the globe. So this market is just beginning to grow, in my opinion. And so there is so much room to go on the upside because we're just in the beginning. We're just learning about all of this. There are new programs, new engineers, new software that is improving the ability to shift assets back and forth. And as that grows, so does the market. So do the participants. So we're giving many institutions, many banks, many people the opportunity or just the ability to transfer funds immediately and cutting out the middleman. Who's the middleman? The banks, the financial institutions that take and transfer your money, that actually hold on to your money. So we take all that away and it just really energizes and puts a lot of efficiency into the whole process of your money getting to where you want it to be quicker. That's really important as we move forward in this whole technological advancement of how we do business. So back to the count. So on the weekly chart, we can see that we're looking at a minor fifth wave. Now, what's the other side of that? Again, this remains my preferred view. What's the other side of that? As I said before, this would just be wave A of that minor four. This would be wave B of that minor four. And we would be looking for a C wave down. But again, it needs to begin. It needs to start to accelerate lower. And that could still happen. So I'm not declaring the whole picture over and now we're just going to continue to go up. I'm presenting the preferred view, but the alternate view would continue to look for downside. What's going to make that difference? If we start to get a stronger slide, and basically on the 4-hour chart, comes down and breaks the 200-day moving average, come down and breaks some basic support here for a rally at 43,276. Starts to break there, starts to break below the 200. It's now definitely demonstrating weakness in the market. And then we'd start be looking for some additional points lower. And if indeed it is going to be a C wave, then, and this is its top, let me just remove this particular level and this one. And we're going to take a quick look at that. What we do is, again, using the Fibonacci extensions, we're going to now take a look at what the process, and say, again, if we're going to say that this is the complete B wave, here's what we do. We go out there to 65,000, right there, that one, and we bring it down to that bottom of what we're calling wave 4, but if say that's just wave B, and then up to the top of that wave C. Right in there, come on. There. This is what a C wave should look like. Now, what are the most common relationships of this would be the A wave, and this would be the B wave, and now what should that C wave look like? First of all, it's going to be a 5-wave structure, and it should be very clean. We're not getting the start of that, essentially. Let me go down 1 to our hourly so we get a little bit better picture of what we're looking at here. And you can see, okay, maybe this is one, maybe this is two, but if that's the case, this is three. Third waves are the longest and the strongest, so it should get moving. Now, yep, we're sitting down towards the bottom of the range here. Okay, we've opened down here in the Globex session today. So yeah, that possibility has to remain. So what's that going to look like? Again, a quick 5 waves down. This does not look impulsive because a C wave is going to be impulsive, but in a counter trend move. Okay, same impulse power, but in a counter trend fashion. So, excuse me, back out to that 4-hour chart. If we start to slide and get lower, it should be an easy shot down to 43,435 and below. And then we're going to see where our levels of support are going to come in. Now, the minimum for a C wave as it related to the A wave would be that it's going to come in and be 100%. So in other words, it's going to be equal in length. Well, that's all the way down here at 13,975. And quite frankly, I think that something very, very serious would have to happen to the system to the functioning parts of the blockchains of cryptocurrencies or interest rates. Bitcoin tends to be very sensitive to interest rates. So there's a lot that can happen to force mass liquidation of positions. So I don't necessarily see that. But so what I would think is that if this is a C wave, it just needs to go down and break below that level, 29,275. Here, the next most common relationship between a C wave and an A wave is that it's equal to 0.618 times the length of that A wave. And that comes in at 28,004. Puts in the new low, fulfills that requirement of an ABC, and is not as devastating. So it is more of just a correction. And that I can see. That fits a lot cleaner. It's going to kind of really shake up the market if they start to really kind of hit it and sell it. And we have some larger players are going to get out of their positions or whatever. It does fit cleaner. Now, we also have additional support at 24,809 and then 21,000, almost 22,000. And I would think actually, I would not be looking for this. The max I would look for is right here. And the current structure of cryptocurrencies and the current structure of the development of the blockchains, of development of the systems that propel and operate within this asset transfer system, I believe are getting stronger. So I don't see a mass exodus as if it's all off the boards right now. But again, if something should be known and then it's put out, then of course that's going to change the outlook. But right now, I don't have that information. So we're going to let the market tell us. If indeed this was wave A and this is wave B, I'm looking for it to start to really increase the downside speed. It's going to start to accelerate as wave C gets underway. And it should move quickly to get down below 43,435. In lieu of that not happening, then I'm going to expect what we were looking at before. So let me remove that again, and let's put the other one on, which I have to go back out to that weekly. So now you've got a picture here that's presenting you both sides of the coin, so to speak. And that I think is important because now we're ready. And now we kind of can have where we think anything's going to come from. So if we're going to get a serious decline that's going to take us back down towards this 13,000 level, something's going to have to kick it in the teeth. Something's going to have to shock the system, shock the market to get it to turn and exit that hard. Can it happen? Sure. Stranger things have happened in all the markets that I follow. And so I would be surprised, and that surprise is what's going to drive the downside. but I'm not looking for it. And that's why it would be a shock. People are not expecting it and they're not looking for it. When it hits, mass exit. But that's going to be the clue. If this thing just starts to drop, you're going to know. So right now, I'm going to leave this in as my preferred count. And we can add that one additional, and that's to say that if this 4 is over. Now, again, look at this on the weekly. This is the weekly moving 4-day moving average. That doesn't have as much effect on the weekly, but if I'm going to bring it down to the daily, it is sitting just below it. And it's no big deal, but it's sitting just below it. And so it can recover it, both the 4 and the 8. But if it comes down and starts to break the 20, it's beginning to display weakness. If it breaks the 50, this is the daily 50, it's now truly displaying market weakness. Now, again, it's going to have to close below these, close below the 20. It can't just come down, touch it, and go back up. That's not displaying weakness, that's displaying support. And then we would look for the rally to continue. If it comes down and breaks it and closes below, we have market weakness. Then we're looking for a move down to 42,665 with some support at 42,925. If it comes down and breaks and closes below the 50, now we have more serious market weakness, and we've been looking for a continued drop. That's how we're going to, put together something's up in the market, something's showing weakness. And if we don't necessarily know, because we're not pulling it out of the news or we're not getting any sustenance in terms of information from the market, we at least now can get an idea that they're displaying weakness in the market. And I'd be looking for it, and raises the alarm that, well, possibly we are in that ABC and we're going to come down to this 27 to 23 area. Remember, 28, this low is actually 28,800. We had support just around the 27 down to 26, and then again at 23. Not that severe, but again, from here, it's $20,000. So if the market starts to display weakness, then yeah, then we kind of come back, and that this is only A of 4, B of 4, and we got a C of 4, and this 4 would then move over. That's how the fluidity in the market helps us to adjust our counts. So I'm still quite satisfied with how this has all been labeled. So I'm leaving that as is. This is what remains in motion and as to direction right now. I'm believing, because of the hesitation up at these higher levels, that it's just consolidating before it starts to make its next move higher in the form of a minute fifth wave. Then if that gets underway and we start to break above 50,585, I'm going to feel much stronger that we're going to eventually go up and break 65,520. This is where I'm going to leave this particular lesson. So again, just to kind of review what we've talked about here today, we reviewed the count that stands, that I'm quite satisfied with how things have been labeled. And I'll move it back out to that weekly so we can see it. I'm very pleased with this, again, from that beginning. And then I also reviewed that what are we doing? We still only have intermediate waves 1 and 2 complete. Intermediate wave 3 is still in force. That suggests that we're going to move higher. That suggests that this minor fifth wave would just be completing intermediate wave 3. Then we have a fourth wave correction, again, an ABC in a counter trend move, and we still have a fifth wave advance. That's the one that I think, if all plays out, will take Bitcoin above $100,000. So leaving it there, but that's for the upside. Our downside, right now, we may have to move that 4. We're going to let the market tell us. And how are we going to know more information? If it starts to break down below these moving averages, as I pointed out on the daily, if it starts to break, then we are now witnessing and getting confirmation of market weakness. And in that market weakness, yes, we would then be looking for those lower levels. And again, remember, we have additional support just below this low. And in all honesty, if this is an ABC, that C wave just needs to put in a new low below A. But if this is wave A, once it goes below there, and I can count 5 waves down, we're into completion area of that C wave, and then a resumption or a return to the advance in the way of a minor 5th wave. So any decline from here, as long as we don't break and get news it's going to force this market lower, we're just displaying market weakness, and again, in a corrective counter trend move. So counter trend suggests and means the market is still in an upward trend. It's in a bull trend. That trend would be broken if it comes down below those levels I talked about. And the trend could still be on a much different alternate view, would start a new bull phase, and that this would not remain. This would be a larger A, B, and a larger C wave. And that C wave would be expected to break below 31.35. Now, if that's the case, it's a major shock to the system, a major shock to the market. Something completely falls apart. Something is going to turn this from being positive means of transferring assets to absolutely shutting the door to that whole process. I don't see that right now. With the development that I'm seeing does not suggest that that's in its future. That's why it would be a shock, should it happen. But that's what I would expect. So the alternate view suggests A, B, C. And then we already talked about it. C wave needs to take out the low of A before it's complete. That would be the alternate view. I'm not even going to label that out because it's not something I really would think. We have a little smaller alternate view as to whether or not this is going to be the completion point for minor 4, and that we're in this minor 5th wave, and that we're getting ready to really start to move higher in a stronger fashion. And these, if you just look at that 3rd wave, this is on a weekly, but it was an up week, up week, up week, up week, up week, up week. So if we do that again, 1, 2, 3, 4, 5, 6 weeks up. 6 weeks up from now puts us into October. Could we be up there? Sure, absolutely. Don't discount the power of the product. Don't discount the power of the market. Because if it starts to break, lots of folks are going to want in because of the momentum of where it can go. Trust me, I'm not the only one that does Fibonacci numbers. When you're still looking at Fibonacci numbers, and I'm a trader, sure, I'll pay $50,000 if I'm thinking it's going to go to 76,000. We're talking big money, but again, what we also have in play here in the cryptocurrencies, we have many, many different ways to participate in the market. There's Ethereum, there's Litecoin, there's all different coins that you can participate in. And eventually when I can get charts that have enough information, I'll begin to add those to our picture. So this is where I'm going to end today's lecture. We know basically now, and this is again based on the weekly chart and then down to the daily chart, that this is going to take a little while to play out. But if it starts to break there, I will make another update just to kind of keep us in line to where we are and what we can expect. Thank you for watching. I look forward to the next lecture. Have a good day.